At the same time. Now I can.
Hello.
Sorry about that. We're having some technical difficulties. So I'm going to try to get us going here in just a second. Um, my name is Jason Byler. I am the Education Manager here at Community Homeworks, and we are glad you're joining us tonight. Our workshop for this evening is talking about homeowners insurance and homeowners insurance policies. I wanted to thank Lee for letting me know that our sound was not working, so I was just talking to myself there for a little while. We're talking to our presenter. Our presenter for this evening is Kelly Peters from Kelly Peters Allstate, and she is here to answer questions about homeowners policies and to talk a little bit about insurance. She is not here to sell us insurance, although I'm sure she would be happy to do that as well. But if you have overall questions about your insurance policy, especially your homeowner's policy, tonight is the night to get those questions answered and to find out what you really need for homeowners insurance and what you don't need, depending where you live or what kind of home you have and that kind of thing. So she will talk about that. If you have questions while we're doing this workshop, please go down into the bottom section there and put a question in the comment section, and we will try to get those answered as quickly as we can. Kelly, thank you very much for being here. We appreciate your continued support of Community Homework. So I'm going to turn it over to you.
Okay, sounds good. Hi, everybody. Kelly Peters with KP Insurance Agency. I own a local Allstate office here in Kalamazoo. And I really love educating people about insurance. I actually graduated from Olivet College with an insurance degree, so I always say I'm an insurance nerd. So looking forward to helping you all hopefully answer some questions regarding homeowners insurance today. Feel free, like Jason said, to type in questions if you have them along the way, but I'll just go ahead and get started here. So if you have handy your homeowner's declaration page and you want to pull that out, that way when I'm going through things, it might, like a light bulb might go off because you'll be able to look at your declaration page and see maybe some coverages and then understand, what some things mean on your declaration page. So what is a declaration page? A declaration page is a part of your policy that's going to highlight a few things. So it's going to show you your insurance premium for the year. It's going to show you your policy term, so what your effective dates are. It's going to show you the location of your property, so you want to make sure you have the right address of the home you want to insure. It's going to show you your discounts that you're currently getting on your policy. It is going to show you your deductibles, so what your current deductible is if you do have a loss. And then it's also going to list your policy coverages, which we'll get into here in a minute. And then your limits of liability. So again, if you have that, feel free to follow along with my presentation. So just an overview of home insurance. So what's covered on your home insurance? Number one is your dwelling coverage. So what's dwelling coverage? Dwelling coverage is the structure of your home. So your walls, your siding, your roof, all of that. So if you had a total loss, your dwelling coverage is what the insurance company is going to give you to replace the structure of your home. You want to make sure, especially in today's world with the cost of building materials, inflation, that dwelling coverage is going to be enough to replace your home. If you haven't had a policy review lately, I strongly encourage you to have one with your agent because what I'm seeing is just sometimes the dwelling coverage isn't enough to replace the house if there was a total loss. Next coverage on your homeowner's insurance should be other structures. So this is if you have a detached structure from the house, so a detached garage, pole barn, sheds, gazebos, all of these structures would be covered under that separate other structures coverage. So it would rebuild that structure if there was a total loss or if you have a roof loss, so on and so forth. Another coverage on your homeowner's insurance is your personal property coverage. So that's going to cover all of your contents. I tell everybody that I explain this coverage. If you take the roof off your house and tip your house upside down, anything that falls out is going to be covered under personal property. So that includes appliances, your furniture, all that fun stuff. So you want to make sure that coverage is enough to replace those things, not just maybe what you paid for them 10 years ago, but what it's going to cost to replace them at today's cost. And then family liability coverage. So if someone is hurt on your property and they sue you for their medical bills, pain and suffering, this liability protection is going to help you cover that lawsuit. So things don't have to come out of your pocket, and they don't have to garnish your wages, go after any savings or retirement accounts. So you want to make sure you have enough liability protection to cover those things. Another coverage on your homeowner's policy is loss of use or additional living expense. That is going to cover if your house becomes unlivable due to a claim and you need to rent a home or stay in a hotel while your house is being repaired. Any questions so far about those coverages? I don't think so. Okay. So we went over that.
I did just get a question.
Okay.
Lee wants to know, how much liability would you recommend?
So with insurance, it's not really a one size fits all. Typically, I like to have a conversation with people. How much in assets do you have to protect? So I tell everybody to think about what you have. If you add up your retirement, your savings, the equity in your house, if you are sued, they can garnish, is it 10% of your wages? So if you add all that up, that's how much liability protection you need. So typically a policy will come with at least $100,000. The next jump up would be $300,000. The next jump up after that would be $500,000. And then the next jump up after that would be $1 million in liability. And then you also have the option to carry an additional personal liability policy called umbrella that will give you an additional layer of liability coverage over all your personal policies. So I hope that answered your question, Lee. Thank you for asking.
I have a question from me.
Yeah.
Are there reasons you would get more liability insurance, like if you had a pool or a trampoline or a play structure in your backyard or something else like that? Would that affect your liability coverage, or would that affect your premiums, or both?
Good question. So I can only speak from an Allstate standpoint because that's the one company I represent. We don't raise premiums based on if you have a pool, a trampoline, anything like that. But I always encourage people to realize, because you have those things, you're more at risk for a lawsuit. Because if the neighbor kid hops the fence and jumps in your pool and doesn't know how to swim and they drowned, well, that family is going to sue you for a lot of money. So having that conversation with customers and making sure they have enough liability coverage to cover that lawsuit. So your premiums don't go up because of that, but I would recommend that you carry a higher liability. I think the one thing people don't think of too from a liability standpoint, I always ask people if they're entertainers. Like, do you have a lot of people over and you have bonfires? Do you have a lot of people over for social gatherings? Because I had friends who had a bonfire and a kid, I'm sure there were some alcoholic beverages involved, but people weren't paying attention. Well, a kid fell in the fire. Yeah. And had burns all along his arms. Luckily, it wasn't very severe, but they were sued because of that, because that happened on their property. So if you're big entertainers, you have things that are more risky, you need to up that liability coverage. And it's not that much to increase it at all. So definitely worth it. So your home insurance is going to cover a wide range of perils, so losses. Some examples of things your home insurance covers: theft. So if you have a theft on your premises, fire and smoke damage, wind and hail. In Michigan, we see a lot of hail. It hailed on me today as I was going to get lunch. Yeah. Falling objects, freezing of plumbing, car crashes into your home, water damage from plumbing, furnace, or water heater. So those are just some covered losses that we see that are covered on the home insurance.
What about water damage from a tornado or hurricane, a flood, anything like that?
Good question. So there's a lot of different types of water damage. And the insurance company gets very particular of what type of water is damaging your house. So there's coverage on homeowners insurance that you can add for water backup. So that's water backing up into the house through sewers, drains, pipes, septic tanks. So that water is covered if you have that water backup coverage. If groundwater is coming into the house, so a flood, something from large amount of rain, it's not covered under home insurance. You'd have to have a separate flood insurance policy, which anyone can purchase. I think it was a misconception for a long time that you had to be in a flood zone to purchase flood insurance. That's not true. Anyone can purchase a flood policy. And then of course, freezing pipes. So if you get water damage in your house from a pipe, that's covered as well.
How about water damage through the roof or through something like that?
So it would have to be caused. So whenever you think of an insurance loss, you want to think sudden and accidental. It can't be something that's been happening over time, like wear and tear. So if it's water that's leaking in because the roof is old, that's not going to be covered. If it's leaking in because a tree fell on the house, that would be covered. So there are some limits on coverages in some belongings, typically for the loss of theft. So if your belongings are stolen, there is typically a limit on certain belongings. So some of those are jewelry. So if you have jewelry items that are stolen, typically it's $1,000 per item, per jewelry item, up to $5,000. Theft of tools is $10,000. Theft of money, there's a limit for firearms. That's a $5,000 limit. Trying to think of some other. They just give jewelry as an example on my cheat sheet here.
So if you own more than $5,000 worth of firearms, can you get additional an additional piece on that policy to cover those other firearms, or are you stuck at $5,000? So
no, you can. There are ways to increase that coverage. Yes. So there's a couple different ways you can increase coverage. One, just by adding an endorsement that says I'm going to increase certain line items to certain dollar amounts. But the best way, if you want something covered for its value, like its appraised value, its purchase value, is to schedule it on your home insurance. So by scheduling it, it's going to offer some additional coverages. So it's also going to be covered for mysterious disappearance, along with theft, and of course all the other covered perils. And then it's also going to be scheduled for its appraised or purchased price. So that's what we're going to give you if something happened to that particular item or items. You can schedule as many items as you need.
Lee came up with another question also, whether pests are covered or pest damage.
Good question. Again, whenever you think insurance, it has to be sudden and accidental. So I think of like wildlife, like I've seen it where like a raccoon gets in the house or even like a deer gets in the house and they rampage and destroy things. That is something that actually would be covered under home insurance. But if it's something like termite damage that's been happening for a long time, that's something that's not going to be covered under the home insurance. I hope that helps answer your question. So how do you get reimbursed for damaged property? So you have a claim, you put your claim in. The value of most of your belongings decreases over time, and some homeowners insurance takes this depreciation into consideration when they pay a loss. With Allstate's policy, however, your belongings are covered for the amount that it would take to replace them at the time of your claim. So you do want to check that with your insurance company and on your declarations page, because it will say on your declarations page whether your policy is covered at replacement cost or at actual cash value. If it's covered at actual cash value, that means they're only going to give you the depreciation amount of your property at the time of loss. They're not going to give you the amount that it would be to replace that property at the time of loss. So typically how it works, if you do put in a claim, you are first given a check for the actual cash value of that item. So Allstate doesn't just sign over a check for the full replacement cost. They will give you an actual cash value check and then tell you to go out and start replacing your items. And as you're replacing your items, you're going to send in the receipt to Allstate that then will reimburse you the difference. And I just have an example on here. I don't know if you guys can see it, but I'll just share it. So it's an example of the price of a TV. So the price paid for the TV by our customer was $700. The value of the TV at the time of the claim was $250. The cost to replace the TV at the time of the claim was $650. So we initially issue the $250 to the customer to go out and replace the TV. They then send us the receipt for the difference. We pay them the difference up to the $650. Does that make sense? Okay. And then what's a deductible? So everybody has a deductible on their insurance policy. Again, you'll be able to find that on your declaration page. And a deductible is what you're going to pay first before anything is covered under your home insurance. So I always use the example, you have a roof claim. So a hailstorm comes through, takes out your roof, and you need to pay to get your roof replaced. So that new roof is $20,000, and you have a deductible of, let's say, $1,000. The insurance company is going to give you $19,000. They're going to subtract that deductible from their payment, and then you would need to pay that contractor or that roofer that $1,000 out of pocket. So that is how a deductible works. And then, of course, if you're looking to save premium on your insurance policy, you can always look at increasing that deductible amount. So the higher your deductible, the lower your insurance premium, because you're saying, hey, I'm willing to take on more of a risk by having that higher deductible amount. We good?
Okay.
So let's see. We talked about liability coverage. So we talked about this a little bit, but what doesn't home insurance cover? So again, it even says on here, think of home insurance as accidental and sudden losses. There are some things that aren't covered under your home insurance. So that's going to be basic maintenance repairs. For example, if your water heater cracks, your coverage most likely will not help to replace the water heater, but it might help to pay for the damage that it does to your floors. Does that make sense? That's why it's a good idea to have all your heating, cooling, plumbing, and systems regularly serviced, which I know you guys talk about a lot in this class. Some other things that it doesn't cover are floods. We talked about that, and earthquakes. So And then there are some additional coverages that you would need to specifically add on to your home insurance if you wanted coverage for those. So we talked about a couple of them. You can extend coverage for your jewelry, watches first. So that means increasing that coverage amount. Scheduled personal property. So we talked a little bit about that. We have an option to add identity theft restoration coverage. So if your identity is stolen, this coverage can help with the legal work, phone calls, and lost wages from that identity theft. You can add on that water backup coverage. So if water backs up into the home through sewers, drains, pipes, septic tanks, that is a coverage that we see, or a claim that we see a lot of. So I always recommend to my customers, if they have a basement and they keep stuff down there that they want covered, that they want that coverage on their policy. You can increase coverage for business property. You can increase coverage for sports equipment, music equipment, cameras, building codes coverage. So this is an optional coverage, and I strongly encourage people with older homes, and when I say older, like 10 years, because as we all know, building codes change constantly. So this coverage is going to help if you have a partial loss to your house, say a kitchen fire, and as they're in your home redoing your kitchen, anything that would need to be updated to today's building codes, this coverage is going to help pay for that expense. If you didn't have this coverage on your policy, then you would be out of pocket for those updates to those building codes. And it's very inexpensive to add this to your policy. So any questions about that?
Dorothy Jordan started a question that says, how does your insurance company, but we didn't get the rest of the question, Dorothy. So if you could resubmit that, we would appreciate it. Oh, here, it just came in now.
Okay.
Wow.
So,
how does your insurance company decide how much your house replacement value is? Should it be close to what houses are selling for in your area, or some other formula? How do you get them to increase value?
Great question, Dorothy. So when I am writing a new policy, we have to put in home details in what we call a replacement cost calculator. So some of the home details we have to plug in are the year of your home, the living area, square footage of your home, the type of basement you have. So is it just a standard basement? Is it a daylight basement? Is it a walkout basement? And then is that basement finished at all? Then we also have to plug in the year or estimated year your roof was last replaced. We have to plug in how many bathrooms are in the house. Do you have a fireplace? I'm trying to think of all the questions that asked me. But do you have a central air conditioning unit? Do you have a garage? Is your garage attached? Is it 1 car, 2 car, 3 car? What type of siding material is on your house? So is it wood siding? Is it vinyl siding, aluminum siding? Do you have any special features? Do you have sliding glass doors, French doors? So basically, we take all that information that we plug in there when we're doing the quote, and it calculates a replacement cost based on that. And our replacement cost calculator is updated based on today's building costs, today's inflation costs. So back when, in the fall, when things really just started to rise with, prices and inflation, our replacement cost calculator went up pretty drastically to make sure that we were insuring houses for what it was actually going to cost to rebuild them if they had a loss today. So our replacement cost calculators are updated very frequently to what the insurance company is seeing in the market. So that's why I said earlier that if you haven't had that review, you should. So if you have a current policy, an agent can update that replacement cost. We can update that calculator in your policy. But insurance companies also do a good job. I know everybody has probably seen this, but why is my rate going up every year? Why is my rate going up every year? And it's because typically at your renewal, an insurance company will they'll look at that replacement cost and make sure that it's enough. So I know on our policy renewals, especially with that big change we just had in the fall, they're increasing dwelling coverages about 10 to 20%, depending on what it needs to be.
We're not moving enough.
Oh, it's
Lights just went out. There we go. Sorry about that.
Woo. So I hope that helps answer your question. Did I get it all? There was like 3 pieces. How do we calculate replacement cost? Should it be close to the selling? So a lot of people ask me that. Well, my market value of my house is this, and the replacement cost necessarily doesn't need to be what the market value of the house is. We take that into consideration, but we're more interested to know what it's actually going to cost to rebuild your house if there was a total loss, not necessarily what you could sell your house for. I hope that helps answer your question. And how do you get them to increase the value? So if you are concerned, I would call your agent and tell them, I just want to do a policy review, make sure my dwelling coverage is enough to cover my house if I had a total loss, and then can go and look at that calculator and update it.
At Community Homeworks, we often have participants who get a new furnace or a new water heater or a new air conditioning unit or things like that in their house. When they update those, should they be calling their agent to say, I've got a new heating equipment, is this going to change my policy or
right?
What should you do? How important is that?
For those things, no, it's not. Those are more maintenance things. The insurance company honestly doesn't really care. But if you got a new roof, insurance companies want to know about that, because typically the newer roof you have, the better discount you get, because you've taken care of your roof. So it's that they just give a discount for that. So if you get a new roof, you need to notify your insurance company. If you add square footage, so say you get an addition or you something like that, the insurance company needs to know. But maintenance things like a new furnace, new air conditioner, not necessary. And that is really, I think, it goes so fast when I'm virtual because I don't have people asking me questions. I'm trying to think what else I can cover. At Allstate, we have a couple different packages. I know some other insurance companies have those too, so you pay a little bit more and you get some perks. So with ours, you get like $100 off your deductible each year you don't have a claim. You're going to get a claim-free bonus on your renewal for not having a claim. And then God forbid you do have a claim with us, we're not going to raise your rate because you put a claim in. So I guess to piggyback off that, and this is all insurance companies, if you do file a home insurance claim, your rate, I shouldn't say your rate would go up. I think that's a bad way to word it. You're going to lose discounts. So insurance companies love to give discounts to customers. And on home insurance, typically almost every insurance company gives you a discount for not having any claims. So as soon as you have a claim, those discounts are recalculated. And that's typically what causes your rate to go up if you put a claim in with your insurance company. What else?
What if you bundle insurance with your car insurance,
your good question.
Home insurance, everything else?
Of course, bundling your insurance is the best way to go. Discounts, and you're going to get the most savings by having your insurance bundled. So whether that's auto and home, adding an umbrella policy with us typically gets you an even better discount. So yes, what other discounts are there that I can touch on? I can't.
Can't think of them offhand.
Yeah.
All right, if anybody has any other questions, now is the time to write them in. We'd love to hear from you. What are some other ways, are there other ways that people can save money? Does it make sense to try to lower or raise your deductible just to save money? Does it make sense to cut corners other places to try to save money?
Yeah. So of course, insurance is one of those things that I don't think people appreciate until they need it. I don't think it's worth it to lower coverage options on your homeowner's insurance to save money, because typically it does not save enough to make sense. So if you wanted to insure your house for the market value, so say our replacement cost came to $300,000, but you tell me, Kelly, my market value of my house is only $200,000, and you're very adamant on insuring it for $200,000, you can do that, but the savings is so minimal, it just doesn't make sense. Why not be insured for the replacement cost? And what we calculate it's actually going to cost to replace your house if there's total loss, then save $80 a year to insure it for the market value. So I would not recommend that. Typically, if people are looking to save money on their insurance, I strongly encourage bundling, and then I strongly encourage, if you have the means, if you have the extra savings to increase your deductible, that's where you're going to see the most beneficial savings.
Okay. I'm curious, are policies more expensive in certain neighborhoods where it might be more dangerous to live, or higher crime areas, that kind of thing?
So insurance companies actually can't typically rate by zip codes. The state actually took that away. So like Allstate, we rate by what we call territories, and it's actually more expensive if you have a home in a rural area than it is a city. And that has a lot to do with the responding fire departments. So they do look at that as well. If you live by a fire department, you're going to pay less than someone who lives out in the boonies who's 20 miles from a fire department.
Does it matter how close to the fire hydrant you are?
Yes. So okay. That's kind of, they look at all that. They kind of look at all the fire safety around your house.
Very interesting.
Some other discounts, it came to mind. So payment, how are you going to pay for your policy? We give a discount if your homeowner's insurance is set up with your mortgage through an escrow account. We also give a discount if you pay your home insurance in full for the year. So if it's not set up in escrow. And we also give a discount if it's not set up in escrow, you pay it. If you pay it in full and then you have it set up on an auto pay, you get a discount that way. So, yeah.
Very interesting. There was something else I was going to ask you, and it slipped my mind. There's been some changes in Michigan with auto insurance. Can you tell us anything about that?
Yeah. So, when was that change? Was that 2020? Yeah, it was 2020, July of 2020. The state of Michigan passed a law that allowed options for your PIP medical coverage on your auto insurance. So before July of 2020, everybody in the state of Michigan had unlimited PIP coverage. So you had no choice. That's just what was on the policy. So now with your auto insurance, you have a choice of either keeping the unlimited coverage, which is the best coverage you can have. It's going to cover any and all of your medical expenses for anyone that's listed on the policy. And it's just this peace of mind that if you are critically injured in a car accident, you don't have to worry. The insurance company is going to take care of all of those medical bills. Or you can choose to have a limit. So a limit means the insurance company is going to pay X amount of dollars. So those options are 500,000 in coverage per person per accident, or 250,000 per person per accident towards those medical expenses. There are some other options you can opt out. I don't really encourage anyone to do that because things change, lifestyles change. So if your work, say your health insurance where you work now, is a qualified healthcare plan. So that's what you have to opt out of PIP medical on your auto insurance. And you do have to prove that. But say you get fired from that job tomorrow and you lose that health insurance and you go out, you're so distraught from getting fired, you crash your car, and now you have no medical coverage. So guess who's stuck paying all those medical bills? You are. So it's so, I don't know, you're taking a risk by doing that. Are you going to save money by doing that? Yes, but you just have to ask yourself, is it worth it? The other way you can opt out is if you have Medicare. So Medicare does cover car accidents. And if someone feels like their Medicare coverage is sufficient enough to cover them, I am okay with opting them out because nobody's going to lose. I don't think anyways, I'm not a Medicare expert, but I don't think you can lose your Medicare coverage once you get it. But so those are the new PIP options. And then of course, the more coverage you have in that category, the more expensive. The less coverage you choose to carry, the less expensive.
We have another question from Dorothy. Dorothy comes up with great questions. Does your company discount for being a long-term member? And what do they do when there is a divorce and the female retains the home? Pet peeve, I was changed to new member after 15 plus years with mine.
Okay. Good question. So I want to answer these in order so I make sure I answer them all. So we do offer a discount for being a long-term member. The other thing you get by staying with the same insurance company, how do I explain this so it makes sense? Insurance companies open up different insurance companies within the insurance company. Does that make sense? I know it. I'm like trying to, so they come out every so often with like new policies and new companies. So like Allstate, for instance, in the past 20 years, we have 3 different insurance companies within our insurance company. So it's like 3 different policies and coverages because we have to change them if we are changing anything within our policy. So if you've been with Allstate for the last 20 years, you are in our old company, okay? And our old company, because insurance companies want to be profitable, right? So they always have to look and make sure they're charging enough premium to make up for the amount of losses that they're paying out. And typically they're more concerned about their new companies and not so concerned about their old company. So like, for instance, with all this inflation that's taking place, and I'm sure everybody is going to see this, the Allstate is just filing for a rate increase. But it's only on our new companies, not on our old company. So our 20 plus years customers aren't going to see that rate increase. So their rate's pretty much locked in. But our people that have switched to us in the last 10, 15 years will see that. So I'm sorry if that was confusing. And then so if we have a divorce, and there's a couple different ways we can process that, but typically if who's ever staying in the house, they keep that policy, and then we call it a spin-off. We would spin off the spouse that is not staying in the house and has a new address to their own policy. So I hope that makes sense. But typically in that situation, that is what we would do.
So you wouldn't necessarily start over with a new policy. You would stay with the old policy even if you are now a single adult living alone?
So if you're a single adult that has moved out of the household, you would start with a brand new policy, because a spin-off during a divorce is basically like writing a brand new policy for that spouse that is no longer in the household.
But the person that stays in the house would retain the old policy.
Correct.
And would not be penalized for becoming a single
Correct.
adult. Okay.
Mm-hmm.
All right. I hope we answered all your questions there, Dorothy. I have a question related to my own personal things. I have a 16-year-old son who is hoping to start driving soon.
Mm-hmm.
How can I keep our car premiums low? Because I know that he is considered an at-risk driver just because of his age.
Right. Good question. They're not going to stay super low. I'm sorry. But what I always advise people is do not buy a car or have a car on your policy that's full coverage. So don't go out and buy your new 16-year-old a 2022 Dodge Charger because that's going to be expensive. What I would do is buy your 16-year-old a 2009 Ford pickup truck, that you are okay with carrying just liability coverage on. Because where you see the rise in cost is carrying the collision and the comprehensive coverage for a 16-year-old driver, because they are risky and insurance companies are going to rate them that way. So if you are able to have a PLPD, personal liability, property damage car on your policy, that is what I always recommend for people that have young drivers.
Okay, thank you. Any other questions from out there in cyberspace? It looks like we're getting near the end of our time here with Kelly, so if you have questions, now is your time to ask them, and she will, I'm sure, answer whatever we have to ask. If you're watching this at a later time and you have questions, you can still put them in the comment section. It's just going to take us a little longer to get answers from Kelly because she's not going to be at your beck and call like she is this evening. I don't see anything else coming in.
I'm going to bring myself back in. I want to thank Kelly for being with us this evening. And I think I'm getting breaking up sound.
There, I think we have it back, at least temporarily. For some reason, my sound on my computer is not working well tonight, so I'm not sure what's going on there. I did want to thank Kelly very much for being here with us tonight. Another excellent presentation. I can't wait till we have people in the classroom with you because I know that it's a completely different class with that because you get different feedback from people and so on. So we'll look forward to doing that at our next time. I hope to have people in the classroom tonight, but that didn't happen. So that's the way it is. But I did want to thank Kelly. I also wanted to thank those of you that joined us online. I know Lee was with us and Dorothy, and I know there were a few others that did not comment. So thank you very much for joining us. We appreciate that. Remember, Community Homeworks is a nonprofit organization, so we rely on donations and grants and things like that. So if you got anything out of tonight's workshop, if you found value in it, please head on over to communityhomeworks.org and make a donation there. It's quick and easy to do, and we appreciate that. It helps us keep our programs operating, so that's important as well. I also wanted to announce that this is our last workshop for the month of April. Next week we will start in May, which seems insane because I think I'm still in December in my head, but I guess it's going to be May. And for the month of May, Community Homeworks is going to be taking a break from live workshops. We are going to be reworking some of our workshop things and how we market them and how we get the word out and so on. So for the month of May, we are going to be showing you reruns, if you will. We've got lots of programs out there on YouTube and Facebook from past workshops. We're going to pick out the best of the best workshops from the past, and we will broadcast those. If you are joining us during those, you can still comment and ask questions, but we will probably not have an instructor available right away to answer those questions. So we'll have to wait, and get answers after the workshop is over. So just wanted to warn you about that. We do hope that you continue to join us for these workshops and continue to look for workshops coming up in June that will be live in person, and you can come join us here in the classroom, which makes it a lot more fun as well. Again, thank you for joining us, and thank you very much, Kelly Peters, for joining us and sharing your knowledge with us tonight. We really appreciate it.
Thank you.
Have a great evening, everyone.